Here's how much tax you'll need to pay on your Social Security check when you retire. So as I mentioned in part 1 of if my Social Security check is going to be taxed, you first need to determine what is something called your combined income. Now, there are 2 situations that you can be in. One is you can be single, or 2, you can be married filing a joint tax return. If you are single and your combined income is between $25,000 and $34,000 a year, then 50% of whatever you get in Social Security is going to be considered taxable. Now, if you're married and you're filing a joint tax return and you're making between $32,000 and $44,000 a year, then 50% of your Social Security check is going to be considered taxable. Now, the question is, what happens if you are single and you're making above $34,000 a year? Then check this out. 85% of your check will be considered taxable. And if you file a joint tax return making more than $44,000 a year, then 85% of that check is going to be taxable as well. It is absolutely not fair that the federal government decides to tax you on this money throughout your entire life, and then when you go and retire, now they're going to tax you again when they start giving it back to you. Do you think this is fair? Let me know in the comments below.